Hello traders and welcome to another video review. Today is Tuesday, September 6th, 2022. Let's find out what's going on the Forex calendar. The key event of the Asian session was the RBA Interest Rate Decision and RBA Rate Statement published 6:30, and RBA hiked the interest rate from 1.85 to 2.35. This page has not been updated yet, but this is the actual interest rate in Australia, 2.35%. So we will definitely take a look at the Australian dollar. During the London session, we got some data here waiting to be published. German factory orders, IHS market construction PMI, both of them are from Germany, and we have then some kind of a speech from the German Buba Mauder will give a speech at 12:30. Construction PMI data from the UK are scheduled for release at 10:30, and the market participants expect a drop from 48.9 to 48 points. The same situation here during the New York session is present. Market composite PMI, services PMI, and ISM non-manufacturing employment data are scheduled for release during the New York session. Non-manufacturing PMI scheduled for release at 4 o'clock as well. So bunch of data, kind of important data from the US, and at the end of the trading day, data from the New Zealand in form of global dairy trade price index. So there are some interesting data. Some of them were very important, like interest rate decisions. So let's find out how they really affected the charts, and we will start with the Australian dollar. Daily time frame chart of the Australian dollar. We used to speak a lot about this kind of a chart. What do we have here? We have a drop towards the technical support, 6,854, then a bounce around 30-day moving average, bearish engulfing pattern. Let me just zoom in. Bearish engulfing pattern, and then we going lower. We're going lower towards the level of 6,774. There is almost no reaction for the RBA interest rate decision, because this reaction, I mean, the market anticipated this kind of a hike. There was no surprise. The RBA hiked exactly as everyone expected. So there is the reaction is very limited. However, we can see that the momentum is negative, is way below the level of 50. So it looks like the down move will be continued towards the technical support. 6,715, 6,684 are the levels that are now the targets for the bears. So the bearish trend is still present on the Australian dollar. We should see lower levels here. Let's find out what's going on the US dollar to Japanese yen, because we got some Japanese data overnight, and of course we will have the data from the US economy later on today. Daily time frame chart, USD JPY. What is going on here? It looks like this market is moving exactly as planned, exactly as is being shown before on our scenario. This is impulsive wave development to the upside scenario. We are right now just above the level of 70 on the RSI, which means this market has entered the extremely overbought market conditions and might be soon doing some sort of the correction. As you can see, the recent high right now was made around the level of 141.20, and we are waiting for the wave 3 to complete. We are above the 161% extension of the wave 1. So right now we need to wait for the termination of the wave 3 and wave 4 as a corrective cycle to the downside. Very nice level on the momentum that supports our view of a possible pullback, possible correction in the internal wave 4 coming to the USD, to the Japanese yen market. So Right now, looking good, looking according to the plan, so there is nothing else to say here. What is the US dollar index doing then? It's supposed to go up, and so it does. Let me just zoom in a little bit here on our latest price development. We got this high, 110.24. This is a significant high. Let me just copy one line to mark this high. There you go. And please notice that at the end of this move, we got this doji. This is a doji daily candle, and today we are just a little below yesterday's low. So what it means, we have a new swing high during the multi-month uptrend. And right now, market conditions are again extremely overbought. We have a doji candle on a daily time frame at the very top of this rally, of this uptrend. And right now, we got first indication of a possible pullback or correction coming to this market. The level of 124 has not been seen in many years on the US dollar index. So it's shown. It shows that dollar index is being bought back up across the board. However, if we consider this situation here as a possible correction coming, that means the euro dollar with his current position just below the parity level, but with no significant extension to the downside on the euro dollar, might suggest that this pullback will be deeper and the US dollar will fly higher as a relief rally, or maybe even a short squeeze soon. So please keep an eye on the current developments here on the US dollar index and the euro dollar. As long as the US dollar index is going up strongly, of course the euro dollar won't have the momentum to rally or to do the short squeeze. However, we have very interesting price action here at the top of the recent rally, and that might be the first indication something is about to change on the market. What do we need is another confirmation. From where? From other markets, of course. But right now, let's take a look at the crude oil, because this market is very, very important right now for almost everyone. We keep approaching the level of 85.80, so maybe, just maybe, soon enough, this level will be violated. Beautiful bearish engulfing into the supply zone here. Forced breakout out of the this wedge, if this is a wedge. 1 to 3 nights down, we are penetrating the levels of what's the low, 85.98. So it's just 20 pips above the technical support, a little bounce, and now the question is whether this level 85.80, 84.92 is violated, because the other levels are waiting for bears. The next target would be then 81.96, and this is far below the highs from the beginning of the March at 130. So very interesting price pattern, very interesting market behavior. The cheaper oil is, the US dollar of course might follow its direction. So this is the crude oil. Let's find out what is going on the cryptocurrencies at the end of our technical part. This is daily time frame chart of the Ethereum. Let's just zoom in. What do we see here? Let me just change the time frame to 4 hours, and on the 4-hour chart, if we zoom out, we can see clearly that the Ethereum is extending its gains. Right now it's 17.62% from the low of 1,423. Right now we are testing the technical resistance 106.54. We are about to, it looks like we are about to violate this level and test the 1,722, which is the low from the end of the August. Please notice the fact momentum is strong. However, it looks like the market condition on the for our chart is rather extremely overbought. So we might have some slight pullback, and then of course another rally is expected on the Ethereum. 1722, next target 1785, 1819, and in that situation this rally is not a part of this move to the downside. This is a 20%. If we hit 1722, this is a 20% rally, so it's a bigger movement to the upside than any correction during the wave down, which means this is the price and time overbalance started with the breakout out of the channel, the down sloping channel. So the outlook is bullish for the Ethereum. Targets are on chart. Let's find out if this market will do what we expect it to do according to our scenario. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.